Hey guys, welcome back to the channel. I appreciate you guys being here tonight. Remember, nothing you hear here tonight is financial advice. This is for fun and entertainment only. I do try to give you what I think is good advice. However, it's good advice maybe for me and my family. I can't possibly know your situation. But your financial planner can. So go talk to a financial planner. Check over anything you hear on the internet. All right, let's check out the market, see what's going on. It wasn't moving just a second ago. I looked at it. Yeah, look at this. ES is up a nickel, so 1/20th of a percent or 4/100ths of a percent. I mean, it just dropped to 100. That is just dead. That wasn't a chart of the ES. I was looking at the ES S&P futures over here on the over here on the watch list. Here's a chart of it. It's not much to see here. Nice to see that we had a swing. We made a swing low, and it's a higher swing low on the daily time frame. A swing is where you have a higher low on either side, or a higher high if it's a swing the other way. So, and then today we kind of validated that by putting in a daily candle that had both a higher high and a higher low, going the right direction. Let's see how long it lasts. Let's look at NASDAQ and just see technically what the picture looks like there. Same thing. We made a higher swing low, which is good, which is really good. We really want to hold this level, 24,458 for sure. Do I have audio on? I hope I have audio on. Yeah, I guess I do because there's no comments. Hey, William, how you doing there, bud? All right. So I really am liking this new microphone. Again, a shout out to Dan from Discord who sent me this microphone. This thing is really, really sweet. All right. Let's look at I was going to say NASDAQ also made a higher high and higher low on the daily time frame. So we want to try to hold that and start some upward momentum. At some point, we're going to get back and test this trend line that we actually we tested it once already and failed. But anyway, hopefully this time we can have enough. We have enough buyers there to get through it. All right, and of course the Nasdaq's still pretty well off its all-time highs. The all-time highs is what, 26.6. We're sitting down here right under 25. So we'll see. Let's look at a little Bitcoin futures action. Well, Bitcoin futures also put in the higher higher high, higher low, or I mean, it's put in a higher swing low. But we don't have to go very far to take it out. We go under 65.1 and we take it out, and then possibly 60s on the table. We'll see. Bitcoin doesn't look as strong as the market the past couple of days, and the market hasn't been particularly strong. So anyway, let's look at gold futures. Of course, they trade 23.5, and these are down a third of a point. We'll check out silver futures. Silver futures also down about 3/4 of a point. However, silver futures have the same chart pattern, at least on the daily time frame. We made a lower, we made a swing low right here, and then we made a higher swing low with it was, and that's at that's at 71,860. But in any event, come on, silver, let's go. We're just kind of making a wedge pattern right here. Hopefully we'll break out to the top side, or hopefully maybe we'll fake out to the bottom side and then roar back up. All right. That's what we want. That's what I'm looking for. I bet that's what William's looking for. I don't know if William has any silver, but still, silver's turned into a risk asset. Silver, gold, Bitcoin, they're all, because of inflation, people are trying to get their money into Bitcoin or, into silver and gold. So that's been a thing lately. Let's check out oil. What is oil? I mean, I know it's USO, but oil is. I used to know oil. GC or no? That's gold. How can I not know oil? CL, of course. Oh, of course, that's so easy. Light sweet crude. Oh my gosh. I mean, I trade this. Whenever I trade futures, I've tried to flip those a few times. Probably the micros. Anyway, all right. Well, gosh darn it, CL. Okay, well, let's see how it's doing. Well, looks pretty good. They're all talking about a breakout here. I mean, everyone on Twitter's talking about a breakout, but that's where this helps me. I just see a great big trading range. I don't know what time frame they're looking at, but I mean, I'd like this thing to break out, but I mean, I just see. I bet we could, if we zoomed out, I bet we'd have a wedge, an atomic, the old wedgie pattern there, or just a wedge. All right. Anyway, but it is interesting to note on a 30-minute chart, crude is definitely, trying to break out. I mean, we've hit this 65.5 level 1, 2, 3 times now, or 4 times, including this, and trapped or rejected out of it every time. So hopefully if we can get above it, if the bulls can get above it, hopefully we'll stay above it. All right. So that's that. And, so let's look at some of the, well, no, actually we're here for the diversified divas. We aren't here for the diversified divas. I was going to pull up the divas, but heck, this isn't diva hour. This is a daily factor hour. So tonight's going to be a really good one. And I'm really excited about this. I cannot believe I haven't thought of this prior to now. Chad's in the house. Hey, Chad. Can't believe I haven't thought of this prior to right now or this afternoon. But so tonight we're going to look at high yield funds, but we're going to look at the safest high yield funds, the most boring high yield funds, things that like BNDI and, things that just barely move, that are just super steady. Anyway, I picked out the 20 mathematically safest. Doesn't mean you're going to make money. Doesn't mean they're safe. Like, oh, I can't lose money, but it means that you shouldn't lose money as fast as you might in something like MST or something. But you also won't make money as fast as you will in something like MST if you're on the right side of the trade. And of course, MST is the strategy-based high yield fund from Defiance that's double leveraged. And I'm sure it'll do great someday whenever Defiance or whenever, it'll do great because the double leverage, but it has not been doing great lately. It needs a better market from MicroStrategies. I bet it did pretty well on the day that strategy was up 25%. Let's just check. I'm not going to stay in this lane. I just want to check though, because I never did think about that. It should have been up because remember that strategy was up 25%, and Misty from YieldMax is so badass. It was also up 25% because of the covered call spreads, and because I bet you they put the options way far out of the money. That was a big win for Misty. Now, it probably didn't. I bet this one's totally capped, even though it's double levered. I bet it's totally capped. So sure enough, it looks like on that day, this one went from 244 to, well, no, this one did do pretty well also. This one looks like it hardcore. This one had a great day. Let me see here. All right, so we closed at 244 and we finished the next day at 365. So that's a 50% move. Wow. All right. Okay. So that's the double leverage working for you. The underline was up double. So anyway, then since then we've been forming a wedge pattern. All right. Back to the divas. The spoiler alert, MST is not going to be on the safest list. So, all right, guys, the divas, here we go with the divas. I had a talk with my assistant and I told them not to mess up the stable decks. Remember the past couple of nights they've been messing up the stable decks, and I gave them a little better instruction this time. Now I know the numbers still aren't big enough. All right, so I had a mess up. I put this MAYY on there. That's not even a fund. MAYY is not even a thing. Maybe they're going to come out with one. I just need to take the whole thing off. Anyway, I thought that was maybe the Granite Shares one, but it's here. Now I'm talking about it. I'm going to have to look at it. Anyway, sorry I put that on there. That's a data error. Yeah, there's not even any tickers called that. All right. Well, my apologies. Just pretend like you didn't see that one. All right. So let's go. Let's sort. Oh, they didn't make it sortable. If I don't tell them, give them exact directions, sometimes they mess that up. Gosh darn it. Okay. Well, that's not the end of the, well, actually, all right. While we're looking at these, it does kind of drive me crazy. He'll work. Claude's going to work on making it sortable. Okay. Let's just start here at the top. So, well, here's the thing. Okay. Sirloin. Well, first of all, let's see how I picked these. I picked these by taking the 20 highest stable dexes. Now, I think there's something jacked up because, all right, hang on here. Stable dex 41, 41. Okay, so nothing on, I think they've got it jacked up again. Gosh darn it, you cannot find good help nowadays. You know, it is tough to find good help. All right, let me try this one more time. Edit, copy. No, I won't do that. Paste values. Okay. Okay. So I don't know how they've got this jacked up. Anyway, whatever. You got to be kidding me, though. What is this? Anyway. All right. Well, these are the safest ones, and I wanted to show the stable dex. So the most unsafe one is still 45% more safe than the SPY. In other words, more boring, moves less, moves up and down with less frequency, less magnitude, less variation, whatever you want to call it. And that one's TLTI. But anyway, this is our list, and I just don't know how in the heck I told them not to screw up the sustain ability. Okay, it's right here. Okay, well, it's right here. Okay, anyway, so let's see what he has for us. Come on, Claude. Okay, here we go. Okay, so that's how I chose them. So here's our contestants. We have Sirloin paying a 7.71. This is senior loan, bank loans, probably, good loans. Probably AAA, AA, something like that. Who knows? HYGW. This is high yield corporate bonds paying about a 12% yield. That's some pretty good fixed income right there. And it's 4 times as stable as the SPY and pays 12%. Then we have BNDI. Now, this only pays 6% based on bonds, but that's actually not too bad because this is based on short-term bonds that they really pay around 4.25 or something. But I think these guys probably own those bonds, and then in addition, probably sell some premium to generate more income, and they get an enhanced yield. In fact, that's exactly what they do. I remember looking at it. Then we have one called BuyW. Now this thing is a 250 or is a, gosh, they haven't mislabeled is what it is. They have sustainability. I told them not to jack it up. How stupid can you be, Claude? You got to be freaking kidding me. Are you freaking serious? They've got it jacked up. You got to be kidding me, Claude. Gosh darn it, I want to cuss them out. I'll just let it. I want to tell them to fix it. This is the simplest thing in the world. What kind of freaking idiot are you, Claude? Oh my gosh. I can't believe the stuff I have to deal with. Dang it. Anyway, gosh darn it. Well, anyway, all right, HYGW, BNDI, Okay, buy W. This stands for, the reason they call it buy W, in the old days, old guys used to call it a buy right instead of a covered call. We're going to do a buy right. Buy right means you go, but it also means you do it in one transaction. It means we're going to buy Apple and simultaneously write an option against it. So, the Apple will cost us a little bit less money, but we'll have capped up. It's a covered call. You just do it all one. Wait. So they made that into a ticker because that's what it stands for. Whatever it is, it's a 255 on safety. So it's 255 times as safe as the SPY. And you can kind of see that in the price. Now, this is jacked up too. There's no way the price is 432 all three times. If there is, that's a miracle. Okay, we're going to have to go check just because I'm curious. But as jacked up as everything else is, yeah, how could you mess that up too? This isn't brain surgery. These guys just make stuff up. Oh, my Lord. I wish there was a way. I was talking to him. Hey, Claude, you got this whole thing jacked up. What the heck? The columns are mislabeled. Just go back and check everything, please. Okay? All right. Thank you, Claude. Okay. All right, guys. Sorry about that. I just, anyway. All right. So obviously, but you could still see, even with the real numbers, it went from 13.99 to 14.32. It moved over the course of a year 30 cents. So obviously that's, but you didn't have hardly any yield. All right, FIAX. Now this one's a 250. It's fixed income. Okay, well, all this is jacked up, so forget about the prices. But let's go see how safe FIAX. FIAX is pretty safe. I mean, it's trading in $1.02 range over the course of a year. So no one would doubt it's safe, even though I guess the stability thing is right. They've just they just got this jacked up. All right, so my bad. Gosh darn it. All right, FIAX. Then we have Riser. This is fixed income. We're going to see a lot of fixed income in here. It only pays 6%, but I'm sure it trades in a narrow range also. All right, so then we have AC2. Now this is a not a closed-end fund. This is a an auto callable, and this is I thought this one was too new to be in the factor. I thought that this one, but these things grow up so fast nowadays. Let's compare AC2 to CAIE. And not too new. It's definitely been out a third of a year. It looks like it's been out since September. Like I say, these things grow up so fast. Now, CAIE is whipping its butt right now, but it's, we'll see. Maybe AC2 pays a bigger dividend. It doesn't look like it does. It looks like CAIE is just a better ETF at this point. So, all right. Back to the show. All right. So next we have JEPI. Now this one, this is one famous for being safe. It's an S&P based fund, but they are kind of like you could say they're like a portfolio because they don't just take the S&P. They choose 100 to 120 stocks that meet their qualifications. But it seems like to me, like they probably have some kind of screener they run for earnings growth or some kind of fundamental strength or safety or volatility, because they seem to pick the 100, 120 stocks that are safer than the index as a whole. But at the same time, though, they sell options on the SPX, which is on the index as a whole. So they hope to do a little bit better on the stocks they pick, because yes, they're capped on the whole index through the SPX. But they don't perform necessarily like the SPX. If the 120 they choose outperforms the SPX, they can actually get a little bit of alpha that way. Anyway, JP Morgan, these guys are, I mean, this Hamilton Reinert or whatever his name is, he manages, like, I looked him up once. It's just, these guys manage billions and billions of dollars. And they charge a super low fee. I mean, you know, if 7.9% will help you, you could do a lot worse than JEPI. Anyway, next we have YYY. Now, YYY is at 1.179 stability. Now, that is pretty stable, 79% more stable. Now, this is an ETF made up of closed-end funds, but, you know, it's paying 12%. That's pretty dang good. We can't really tell because the price is jacked up, but that's fine. TLTP, more fixed income, or not really. This is based on the long bond, the 20-year, a basket of you know, 20-year securities. This thing pays about 12.24%, and it's more stable than SPY, obviously. SBAR. Now, SBAR is our first, well, no, BuyRight is our first stock fund. Well, JEPI, BuyRight are actually own stock, and now we have SBAR, but most of these other ones are some type of fixed income. But in any event, SBAR is a barrier option. It's like a buffer fund. It's going to be safer and less volatile. It's a decent comparison for an auto callable, similar type situation as far as safety and stability goes. In theory, anyway, we haven't seen how these will do in a market sell-off, but that's what they're designed for. SBAR doesn't start losing money until the market's down 30%, and that's not really actually correct. Its NAV will go down before that. I mean, there's no free money, but it shouldn't lose serious money unless the market's down a serious amount. It should have a buffer on it. So that's SBAR. Let's look at SBAR versus AC2, because boy, CAIE really whipped up on on AC2, but CAIE also whips up on SBAR. So let's run the losers against each other and see who's the first place loser. And it is SBAR. And I know that'll make, well, actually, I don't know if it is. Why do they start this one $100 ahead of this one? I have never understood. They don't usually do that. I can't think of any reason. I don't know. Anyway, so if you take $100 off this one, it isn't actually. They're about the same though. They're about the same. I mean, SBAR does have a higher percentage, but anyway. All right. So we checking on Claude? Well, let's introduce the contestants, then we'll check in on Claude. All right. So now we have XLII. This is the State Street Fund. It pays about 10.8, or it has been super safe. It's a 167, meaning 67% more stable than the SPY, or less volatile, however you want to look at it. Next, we have, this one's based on industrials. Industrials have been doing great lately. Did you guys see that they took ExxonMobil out of the Dow and they put CRM, Salesforce in? And in the time since they've done that, Salesforce is up 40% or something, and ExxonMobil is up 277%. Can you imagine how much higher? The Dow would have even been doing better than it already is if they would have just left Exxon in there. But anyway, they have qualifications to be in the index, and for whatever reason, they decided to put Salesforce in there. But all right, so we have SPUT. Now, this thing only pays 5.3%, but it's super stable. It has a 164 on stability. Then we have XYLD paying around 10, super stable. TLTW, I've had this one myself and somehow made money in this. I made money in everything I did this summer, but it's because the market was going up. It's not because I was smart. I mean, I made money in GDXY. I made money in GPTY, a lot of money in GPTY. In ULTY, did well in ULTY. I killed it between April and October. I was just looking at my Tasty Trade. On the last day of October, I was plus the account was plus 13%, and now I'm back to, and now over the past year, it dropped to zero. If you go back a year, just a year ago today, and look at now, I went from up 13 to zero. But overall, anyway, that was a butt kicking there in November and December. For me, it was. All right. So what were we going to look at? I've already forgot what I was going to look at. Oh, yeah, I was going to look at SPUT and SBAR just for fun. I know they're both super stable. I know that people in our Discord have them. And boy, SPUT really looks good there. All right. Back to the show. XYLD, TLTW. I talked about, that's what I was going to look at. TLTW. I was going to figure out, how did I make money, or how did I actually do this summer? I just remember when I sold it, I was surprised. The price was actually up. And usually that doesn't happen on high yield funds. Usually the price is down. Sometimes you make money, sometimes you don't. But usually the price is down. But this one, the price was up. So I'm just curious, TLTW, and I bought it in like March or something. I thought it would help hedge when the market went down in April. It didn't really. And then I sold it on the last day of October or something like that. I just wanted to see how it's, 25. Yeah, that was a pretty nice little investment. The only thing I regret is, should have I bought TLTP? I mean, and I looked at it, but I chose TLTW. TLTP was available. Doesn't do quite as well as SBAR, but they're close. SBAR's a good little fund there. Let me run this on TLTP. That's what yes, I made the right decision. I don't know what the deal is with TLTP. Maybe I need to do a review. Okay, back to the show. Then we have RIV. This is the River North Opportunities Fund. Then we have MLPD. This is a master limited partnership deal. They both pay 12 or 13%. MLPD's on energy infrastructure. River North Opportunity Fund, I think, is like distressed loans, if I remember. All right. The next we have CanQ. CanQ is from our friends over at Calamos. And they advertise this as an unconstrained buffer fund. So it's supposed to have protection against black swans. It's supposed to have a buffer on the downside, but they do it somehow without capping the upside. Now, because of that, it only pays a 4.8% yield. It's the lowest yielder on here. Although I think it'd be fair to compare CanQ to SPUT because they both pay around the same. Let's run them. Let's run them this summer, and then let's run them. Okay, so CanQ's putting it on SPUT, and they didn't go down as much. But now let's run it to where we're at right now, see how it handled the pull, all right. It got far enough ahead that even though it does look like it pulled back a little harder, it looks like SPUT's definitely safer. You can tell by eyeballing it. SPUT barely lost any. SPUT's actually, SPUT is doing better under distress. SPUT is actually up in the same time that CanQ is down from that late October peak. That's when my account peaked also. That's that late, yeah. All right, well, yeah, that's a good look for both of them. It's a good look for CanQ that it got that far ahead because it's uncapped on the upside. And I'm not sure of SPUT's exact strategy right this second. All right. But I know it's safe, and I know Marcus likes it, and that's good enough for me. All right, then the last one is TLTI. Now, this one was not yet available when I had to buy TLTW. I looked at TLTI. I mean, I looked at TLTW and TLTP. TLTI, I believe, hadn't come out yet. But let's run it against TLTW and see how it looks. And yeah, that's a bad look for TLTI. And TLTI is from NEOS. I mean, TLTW is better than people, even better than I realized. But heck, anyway, um, let's do this. I'm trying to be generous to TLTI. Let's just run it from the end of October peak to present day. Okay, so I mean, I don't know what to say. I mean, that's the first fund by Roundhill I found that didn't just dominate its competition. I mean, not by Roundhill. Roundhill has a lot of funds that dominate the competition too, or they have some, but that's the first fund by whoever it's by, Neos. All right, so I think we're done with the thing. Let's just go back and check on Claude. Let's see. Let's see here. Hey, Claude, I'm sorry for losing my patience or my temper. Could you, how did you do? Do you got it all fixed? I got you. Okay, we'll work on it tomorrow night. I can, I'm with you, but I appreciate your help. I'll talk to you later. All right. He's a nice guy. I mean, you got to give him a heads up. I mean, you got to give him respect for it. He's a nice guy. So I'll work on it. All right. So, but by the same token, I think I already download. Let's see if he, so no, it's not fixed, but we can adapt. Okay. So we've already looked at the stable decks, which is generally the next thing I like to look at. So let's look at the Quandex, and this is not the Quandex, but we can look at the long-term max factor, and that's the same thing. Okay, well, would you take a look at that? A River North Opportunities Fund. Boy, I know my friend Brad is really liking that. Brad, are you here? Let's look in the comments, see if Brad's here. Where's Brad? Uh-oh, Brad's probably, you know, who knows what Brad's doing. All right, so but anyway, I know a lot of you guys are also closed-end fund people. And someone today was talking about MLPD. I think it was old Mark saying I know more than just Mark has this, but somebody in Discord was saying they were happy with this and using MLPD. Remember, this is the long-term max factor. So this is based on a year. We're also going to look at the short term, which is the trading index, which picks up more what's hot now. Anyway, but boy, these closed-end funds are dominating. Then YYY, actually not a closed-end fund, but it's a fund of closed-end funds, an ETF closed-end funds. And then we have JEPI. So, you know, and then we have TLTW. And on a long-term basis, all of these have been doing pretty dang good. Anyway, let's look at the quarterly NAV return. Okay, who had the best quarter? Just looking at NAV. Now, this doesn't take into account the risk it took to put on and some other stuff. But on a NAV, like I say, industrials are just killing it. We have 8.3% in the quarter, and this darn River North Opportunity Fund is killing it too. JEPI, remember I was saying JEPI has they tilt towards value. Well, value's back in, obviously. JEPQ tilts the other way. They tilt towards, and also JEPQ's NASDAQ, but still they tilt more towards growth, and the NASDAQ's naturally more towards growth. But you see JEPQ's nowhere on here. JEPQ didn't even make the list. JEPI is, 79% more stable than the broader market. Doesn't mean it's going to stop you from losing money when the market goes down 20% here in a couple of months or something. JEPI will be down, probably 17% if the market's down 20 or whatever. I mean, everything's going to be down. I mean, maybe JEPI will be down 15 or something. Because of the covered call premium, these might be down a little bit less, but I mean, but it'll do a lot better than a lot of other stuff will. All right. So then we have YYY is on both lists, short-term and long-term. Then we have XYLD. This is one that people sleep on all the time. Anyway, I had something I was going to show, but I'm going to save that. I have some content on XYLD, but I'm going to save that for a video or something. But we have 12 years worth of data on it, and I found some interesting stuff. That's actually that's a boring fund, but it's, it actually could work in some circumstances. I think there's just better ones out now, but that one has a long track record. So anyway, all right. Well, where was the one I was working with? I guess it's this one. Yeah, quarterly NAV return. Okay, well, that's just NAV return by itself. Okay, so the short-term max factor lots of times is exactly the same as quarterly NAV return because that's a big part of it. The first thing the max factor takes into consideration is safety. The very first thing, and the best way to judge the safetiness is with the NAV. And so I was getting a question, and it was all Joe Trucking for Dividends was disagreed with me on some of the stuff I had in my portfolio, but I was telling him that's why I have this. These are the good ones. I'm not recommending anyone buy the stuff I have in my portfolio. I have a different reason to have it, whatever. But these are the good ones. These are, and I can't recommend these, but these, and that's why we do this every night. There's 50 other good ideas other than maybe blocks or something I have in my portfolio that's doing poorly. And so that's why I do this for you guys. But anyway, and I do it for myself too. I'm going to put I really need to get some of this MLPD in my portfolio at some point, just for diversification, just to have some oil infrastructure in there. I had XOMO for a while and sold it. Probably should have kept it. It's doing great now, but oh well, story of my life. But I think this could work out, some MLPD. I'm looking at that. In any event, all right. But yeah, I think this is a good way of evaluating the very safest of the safe. Some of these other ones, have decent performance, but maybe they take a lot of risk to get there, or maybe really the worst one of these is Sirloin was only down 1.3%. I mean, that's the worst on NAV this quarter. So they're all relatively safe. That's how they got on this list. But I think that the top 5 or so are the best combination of safe plus a yield and a return. We also want a high yield, and we also want a high total return, of course. We want everything. And so this tries to give us a good blend of everything. All right. So that's it for the Max Factor tonight. Thank you guys so much for watching that. What else is up? What do you guys want to talk about? I have other stuff to talk about too. If you guys don't have stuff to talk about, I'm going to put my PayPal up on the screen, but it should go away automatically. I'm sorry the not financial advice didn't go away. I thought it was supposed to. All right. So let's see here. Did anyone see that video today on Tuttle? I loaded all of Tuttle's trades in Option Strat. On that video, I only showed the Carvana seatbelt trade, which was a cool trade, and I showed how to lock in a profit. But anyway, then Tuttle also talked about this trade right here. This is an exotic trade, and I didn't put this on the video, so this is bonus content. This right here, what did he call this? He called this seagull. Yeah, a seagull. And what this is, it's just a one-wing seagull, I guess. But what this is this is where you sell a call spread to buy a put. Now, if you sell a call to buy a put, so a short call, long put, that's just a short synthetic or a short combo. It's a combo if the strikes are split. So I guess these are split strikes. If this wasn't defined risk, you basically sold the 370 and bought the 345. Let's exclude the wings. The wings are just for margin control. That's right there is a combo. See, it even says it up there, a short combo, bearish combo. So that's a way to get short the market. So the problem with this trade is you have unlimited risk on the upside. If you did this pre-earnings and Carvana hit earnings and they were up 20%, you just negated all your profit. You locked in, you can't make anything past 371. So if Carvana went to 400 or 500 or something crazy, you know, I mean, yeah, congratulations, you made a $4 profit. So a lot of people don't like unlimited upside. So by adding the wings, you can do this. You can buy a call behind the one you sell, and that way you don't have unlimited loss on the upside. You have a cap loss. Now this trade right here is a 3-leg risk reversal, which is not a total trade. This is, I mean, well, he actually did show us one of those last week. He called it something different, but he does put in trades like this, and he calls this a signal as well. But so this right here is good on the downside, that, you know, doesn't have much, it doesn't have unlimited loss. But on this other side, if the market goes down, it can, this is good black swan protection, but it's expensive. Look at this. It's a $1,200 debit. The whole idea of Tuttle's newsletter today was to let the market finance your trades. So if I include this, it's a $90 credit. So you can do this, and you can't really take your wife to dinner at $90, but you know what I'm saying. But you could do this 10 times. And if, let's say you had 1,000 shares at Carvana, you could do this 10 times, and this would help. This could help hedge your Carvana. The good thing about it is we're just going to do it with 100 shares, just for the purpose of just looking at it. So if you did it with 100 shares, even though your upside, even though if Carvana goes up to 400, you're still in on it after earnings. You made an 11% return instead of getting cut off at 371. You made the extra $19. And if Carvana goes down, that sucks. But you have to lose about 8.8% before you lose big money. So this is like an 8% buffer fund. But anyway, that's a legit strategy right there. Nothing wrong with doing that strategy. And it would really make sense. Let's say you were in Carvana at 300. Then it factors in your profit. And now it has to drop more than 21% before you give your profit back. And if the stock, if it hits earnings, it keeps going up, you can still make money. So that's a way to do it also. But anyway, I thought I wanted to show that because I didn't get to show that in today's thing, but I thought you guys might be interested. All right. So what do you guys want to talk about? WTI, yeah, West Texas Intermediate. That would have been a good guess, but I should have known CL, light sweet crude. But yeah, WTI could be a future symbol also, or it's probably just that it has 3 symbols and they probably wanted 2. Okay. Hey, I'm guessing your name might be Henry or Henri, or maybe not. Maybe that's just, but, thank you for being here again. This is, you were here after work, and I appreciate that. Best way to trade SLV is sell deep in the money covered calls. Hey man, what's up? This is the Max fam here. Anyway, holla. Hola fam. Hola. No. Bond said no. What are you saying no to? Maybe I asked something. Or no, you said ho. I got you. Claude and his dadgum naked. So Claude can't do any dadgum thing right in the world, can he? Claude's such a dadgum idiot. Sorry, Claude. I have his ears turned off right now. No, he redeemed himself. At least he admitted what he did. I mean, freaking Gemini will just flat out lie to me sometimes. Tell me he can't do something and then he really can. Heck yeah, Marcus. CAIE was making all these other ones look like, you know, school kids or something. CAIE's dogging these other ones. But you have to admit, though, that AC2 didn't look super impressive, did it? Right? I mean, but you think ATCL might match CAIE. They're the same, just ATCL's coupons are, oh yeah, that's right. A daily coupon. I wonder if they could pay you daily. You remember when they were supposed to make QLDY daily payer, and which is insane. I can't even believe it pays twice a week. But if you could get daily coupons, you could probably make it daily pay. I mean, in theory, it'd be an extra. It'd be a pain. You'd have X day every day. I mean, how does that? How would you even do that anyway? But all right. So this is the Rex auto callable. All right. So it just came out. So yeah, let's do this really quick, and then I'll answer questions or whatever if you guys have anything. All right, Rex partners with CO. All right, what is this? Okay, Rex has a partner, the ETF supported by CAIS. I wonder if that has anything to do with CAIE or something. But anyway, they're the leading alternative investment platform for independent financial advisors. Probably not. Which will serve as a core platform marketing partner for RBC Capital Markets, a global, okay, blah, blah, blah. All right, demand for outcome-oriented strategies continues to rise. ATCL is designed to provide exposure to a rules-based income-focused exposure that does not rely on traditional credit exposure or extended duration. The fund utilizes the Bloomberg U.S. Large Cap VolMax Auto-Callable Total Return Index, aiming to reflect the performance of a systematic laddered portfolio of auto-callable derivative positions. The ETF seeks to deliver consistent income while mitigating relative downside risk. Maintaining exposure to broad equities, our collaboration allows us to deliver a thoughtfully engineered outcome strategy. I'm just trying to scan it real quick. I just don't see that about the daily is what I was trying to find. Okay, about CAIS. CAIS serves 2,000 wealth management firms and supports. They have offices in Austin. I love these guys. All right, let's get these guys on the show. CAIS firm, Austin. Okay, CAIS group. I wonder if they're the sub-advisor on CAIE, and they named it that as a shout out to them, and the E stands for ES. Lots of things that are S&P ETFs have either an S or a X, or sometimes an E. Anyway, financial advisors, asset managers, structured investments. Let's see what ETFs they have. Cost efficiency. Oh, that's just ETFs in general. And interesting. All right. Well, I need to do some content on them. All right. Tiger's planning to add some CAIE for his monthly stagger under week 2. There you go. There you go. So what do we have? So we have week 1. So you're getting paid weekly, but you don't have to have weekly funds to do it. Week 1, you have T-SPY. T-SPY is a good one. Week 2, CAIE and XPay. Week 3 is TDAC, sweet. Week 4 is SPY-I and Triple QI. So those are all indexes. Doesn't mean that indexes can't go down, but they go down less. And, and it takes a really bad market to really kill an index, unlike an individual stock, which can get killed on a bad earnings announcement or something. So, yeah, I like it. All right. Let me put it up there so other folks could see it. Sorry about that. All right. And then add Maggie and EDGQ and EDGX from Global X. Yeah, I saw those today. They're in Discord. I need to do some content on them, but they're low priority. Right now, my main priority is the new X funds, Golden and Silvex. And then right after that, I'm doing another hedged equity review. And I'm going to look at QRMI and XRMI. But then after that, maybe we could talk about some of these other. But I have my next 2 videos planned out. But there's all kinds of stuff I could do. A a comparison of all the auto callables might be fun, I guess. The prospectus says SOFR, which is, I think that's another way of saying the prime rate or the interbank lending rate, what institutions lend to each other. I think that's what it is, but it sounds like that. Plus 10%. Okay. So I think SOFR right now is, let's look, 3% or something, or 1.5%. Let's see. SOFR. Secured overnight financing rate. So it's just like a one-day loan. Lots of times they quote SOFR on just on not an annual figure, but just like a bips, like the SOFR's like 5 bips or something. So it's it's the daily rate. So it's what 1 day's worth of interest cost you, probably at the prime rate, probably that's set by, forward-looking rates. Okay. Why is SOFR used? Less risk of manipulation because it is secured by U.S. Treasuries, backed by a large transparent market, and it is considered virtually risk-free compared to LIBOR. I thought LIBOR was risk-free too, but maybe not. Maybe it's not as risk-free as SOFR is. Okay, well, that's cool. So market coverage, it represents the wide range of, okay. Interesting. Interesting. Oh, yeah, you guys didn't see that, but I mean, it's right there. You guys don't care about that. All right. Or I read all the good stuff to you anyway. Okay. Yeah. So I wanted to know what the actual rate was right now, but if it's 1 day's interest, it's like at 15 bips or something. So it's going to pay 10. So it's a 10% target fund. They want to pay 10% plus SOFR means their lending cost, basically. So I bet that, I don't know, maybe it equates to 1%, but it's a smaller amount. It's a smaller amount. Okay, so let's see what else I have for you guys. We have some other stuff we can look at. I really like those, the totals ideas today. Here was the graphics for it. Got to love the Siegel trade, selling a call spread to pay for a put spread. They have it on the wrong wings. They should have put the call spread over on this wing and the put spread on that wing, but that's fine. Yeah, but we do have it does seem like about every couple of years we have a meaningful drawdown, meaning more than 20%, meaning we go into at least a temporary bear market. It happened in 2022. We went under the 200-day and went into a bear market. Then it happened. This April, it really wasn't. It was about 20, I guess, at the most, and it didn't go under the 200 days. So I don't know if this April accounts a meaningful drawdown, but definitely not. I guess actually, possibly that's what it is. April would probably count as a meaningful drawdown, but the major drawdown was 2022 and in 2020 for sure. But then before that, we hadn't had a meaningful drawdown since, I guess, in 2019, we went under the 200-day for just a bit and then popped right back up. But it had been a few years, and the late teens were some pretty good times in the market. Other than the Volmageddon, but it just recovered so fast, and it didn't even go under the 200-day. That was January and February of 2018. Then 2019, we sold off in October, just like we lots of times do. We took 2 legs down, sold off in September and October, bounced around a little bit in October, then the bottom fell out, and we set a low on Christmas Eve. I remember that one well. Current SOFR is 3.71. Okay. But so what I'm thinking, though, is, yeah, that's the SOFR for the year. But when they quote the SOFR, they did say it's the daily rate because they always call it the overnight rate. So, but anyway, so it's either 13.71 or less. But yeah, maybe it's 13. That'd be great if it's 13.71. I thought they were referring to the day. I don't know. We'll see. We shall see. All right. So let's see, how did earnings go today? Did earnings idea for Walmart? I mean, it's down 150. What was this? Let's see what Walmart did. Of course, it's still within the range where it's going to be all right as long as it doesn't drop another 1.6%. So I'm guessing Walmart's not till the morning, is it? Or was it today? I'm trying to think. No, it's for the morning. Okay. Well, we'll see. We shall see. What's this one right here? Oh, that's just another way to do the same thing, but you don't have to have Walmart stock. That's what I was trying to show. That first trade I showed was 100 shares of Walmart, a short call and a long put. The Yalty strategy, a caller, a seatbelt, as Matthew calls it. But you don't have to have the stock. You can switch the put to a call and just use 2 calls. It's the exact same thing. No stock. Doesn't matter that you don't get more upside with stock. A lot of people think you do. It doesn't matter. There may be reasons why you want to own the stock for other reasons, for sure. I mean, but just as far as putting on a trade, this is the same thing a bull call spread's a synthetic caller. All right. So that's, I think, what I was trying to show there. Oh yeah, Sedgwick. How did this one do? So this one right here is the 3-leg risk reversal, put sold to finance a call. It looks like Sedgwick's already happened, so I guess it didn't blow out earnings. No, it did not. I guess it did, and then it sold off. Oh gosh. Well, all right. Good thing the strategy has a buffer and it's still within its buffer. But if it drops much more, it won't be. None of you. I don't think anyone did these anyway. I made content on it yesterday, and when the market was open, and gave them all right. Actually, I didn't make content. This video didn't turn out very well, but I just put the trades in Discord and just so we could look at them. And nothing. This other stuff's just other stuff I was looking at. Okay, so if there's anything else you guys want to talk about, don't be shy because I'm running out of stuff to talk about. I can just let you guys go. Do we have anything on Twitter to talk about? Probably not. Here's my show I'm working on, new fund alert. I've showed you guys this already. These are the positions for SLVX. Oh yeah, this is what I was going to show earlier. I'm going to make a video out of this, but you guys get a real quick preview. Okay, this is such a great example of there not being free money in the world, but how 2 investments can both be good investments if you just so this is a long-term look at the covered call business. QILD has never reverse split. Now it only pays 12%, so it only needs the NASDAQ to be up about 12% to offset the money it pays, the money it fronts you essentially through the yield. So and that's not that hard to do. Now I know QILD hasn't been the best looking one over the years. I mean, in 2022, people hated it, and it got and it took forever to recover. Oh my gosh! But over a long enough time frame, it's, I mean, over 5 years, it's 73%. Still vastly. If I put the SPY on here, it'd be up here. I mean, of course, it's underperforming the SPY. The SPY didn't give you this many dividends. Anyway, so then we have FTHI. Now, why is FTHI doing better? Well, a lot of people, and I always discourage this kind of thinking, but a lot of people would say, man, Q yield sucks. Look, FTHI is better. Well, why is it better? Well, could it be that it paid less dividends? So, I mean, and sure enough, because look, they started, one started 25, one started at 20, but QILD paid 50% more dividend, even when you factor in the difference in starting prices. I did the math on it today. QILD, It's QILD averaged like 11 and FTHI averaged like 7.5. Nothing wrong with FTHI except their website. This is that company, First Trust. They need a new website, no doubt, but it's a good fund. Like I always say, take the fund that pays if you want better NAV performance, and this is over a 12-year time frame. That's what you have to do is you have to accept one that pays less. Look at FTHI is actually its NAV gone from 20 to 23 over 12 years. QILD has had some decay. Its NAV has dropped it's down 50% or something, but it's because it's giving you more of your money in the form of a yield. So, but I thought that was somewhat interesting. Now FTHI would be better for sure if like you looked at the chart and then the dividend was the same, then you'd be going, my gosh, FTHI all the way. But when QILD pays 12 or pays 11 and FTHI pays 7, it totally explains this. Totally explains this. All right. So I had that to show you guys. We'll do you guys want to make a request for what the max factor is tomorrow night, or we can talk about it later. Need to get some content out on this Rex Auto callable. What do we know about this advisor shares? Have you guys heard about this? Somebody was talking about this in Discord. Which one is this? Pricing performance. Okay. Let me see which fund this is. Oh, okay. The fund's name is Vega. So it has, I bet they're trying to replicate a 60-40 is what it looks like, because it has 54% equity. And then it has, okay. So no, it has more. It has about 70% equity, 25% fixed income bonds, and then some cash and some other stuff. Real estate. But yeah, anyway, so this thing should absolutely, they're bragging here about their market corrections, but of course it should do better during a market correction because it only has 70% of the market. So it should get about 70% of the downside, and the bonds should help a little bit. But sure enough, so in 2015, the market was down 12.4. Oh, we were talking about the times the market sold off in the 20 teens. I said it was a good time. 2015, 16, 18. I don't think there was any sellbacks more than 20%. And you can tell by this chart. In 2018, we hit right at 19.8%. That was Volmageddon. This year's the market just went up. This 2019, I remember this was that's 2020. Okay. They don't have the 2019 pullback on here. But anyway, the 2020, I remember that went down 33%. That's 33.79. So really like 34%. The inverse of 34 is 66. It almost hit that Fibonacci number of the entire time the market's been around, that, the 63% pullback, or it did hit it. Anyway, but these guys were just down 23%, but the other guys were down 33, but you have to subtract 30% from 33. 30% minus 33 is 22. And these guys were down 19. So they did a little bit better than just 70%, 30% better. Well, anyway, but yeah, they do better during pullbacks because they take less risk. So let's see how they did during the April pullback, right? We don't have I guess the April pullback's right here. Yeah, that was 18.9 on the SPY, and they got 11% of it. That's not too bad. Not too bad at all. So anyway, yeah, advisor shares. The name of the fund is Vega. Yeah, the global buy right. I just couldn't think of the name of it. Symbol's Vega. It's a global buy right. So by global, it means 16% global, still mostly U.S. equity. So it's just a nice little fund there. I mean, it could definitely work. I mean, it depends on what you're looking for. I think the one that I kind of like in that category is, or I used to like, it mimics a 60-40, but let's see how it's been doing. I haven't been doing that well lately. Maybe it's this other one. Is it TSP? There's one from who's it from? His name's Greg Stoner, the fund manager. T-Oak is what he manages. I keep wanting to say Tuttle because it's T, but it's not Tuttle. It's anyway. But he had one in here that they use it was supposed to mimic a 60/40. I thought it looked really good. I guess this is probably it, TSPX, and it does look like, I mean, because in the pullback it was down, about 20% less, and it's somewhat matching it now. Let's look at SPY A. They have a couple of them. They have SPY A and I don't know. I don't think that's it. Well, SPY A doesn't look that good. So let's go here. Twin Oak. Yeah, Twin Oak. That's where the T comes from, the Twin Oak. Okay, so yeah, but this SPY A, I think, was supposed to basically be a 60/40, but you could buy it with one click of the mouse. You see, you don't have to buy bonds. But anyway, it's a fund of funds. It has some T-Oak in it, which is basically like a bond. But so let's look at this old, I guess it's TSPX. Yeah, that's not SPXT. It's TSPX. Okay, this one looks a little better. Let's check out this one. Or TSPX. Yeah, okay, that looks like I mean, it looks like it goes down a little bit less. So it looks like it goes down a little bit less. See what the market's doing. What are you talking about, Marcus? Do you want me to look at the global buy right? Or, oh, you're just saying, wow, yeah. All right, the Qs are picking up steam. They're up 17 bips. They were up like 5 bips earlier. ES was up 4 bips. Now it's up 10 bips. We doubled our gains. LFGY, right? Or LFG, whatever the expression is. All right, guys, I'm going to get out of here. I'm hungry. I'm going to go make something for dinner. But I appreciate you all for being here. Be looking for the new content coming out. It's going to be on the new X funds. That's coming out first, and then I'm doing some more how to prepare for the next pullback or whatever. We'll do that. Okay. Marcus likes old FTB. Boy, everyone's getting in on the fund of funds. Freaking First Trust needs to, before they open up any more funds, they need to build a new website. Marcus, you need to call them up and try to sell them. You're a designer. I figured you might be able to do that, but a web designer needs to hit them up, and I bet you people have. They may just be old school and like that, or something. All right, well, let's check out this FTBI. Balanced income, I like the sound of it. I mean, it's only paid 4.72%, but it looks like it's about 80% of a year. It'll probably pay 6 or 7 by the time it's all said or done, just kind of eyeballing it. So their allocation is they have about a 20% allocation of the covered calls, First Trust buy right. See, they call it buy right also, and this has been around since 2014. It's just such an old-fashioned thing to say. Let's do a buy right. My grandfather's broker used to call them buy rights. All right. TDVI, that's that dividend one we looked at the other day. And then we have FTQI, which is the NASDAQ-based buy right. And then we have whatever this is. Oh, SDVD. This is the Rising Dividend Achievers Target Fund. First Trust. This doesn't look like a bad fund. I mean, First Trust, Corn, whatever that is. Dividend Aristocrats, King. Oh, I didn't know King was theirs. KNG. Cool. And then RDVI, Rising Dividend Aristocrats. Then we have Gold Strategy. That's good. and some bonds or intermediate duration, maybe so some notes. I think those would be notes. It goes bills, notes, bonds. I think, yeah, that's right. So those would probably be some based on some notes, or who knows, maybe bonds, but bonds and notes probably. Huh? Yeah, that's a good one. And if 7% will help you out, we've seen some other good ones tonight. There's one of them paid 7.99. Oh, JEPI. Let's run FTBI against JEPI because it looks like it's a pretty fair, comparison as far as yield goes. Yeah, but they need a new website. Man, JEPI, JEPI, it's JP Morgan, but FTBI could work too. I mean, I was going to say neither of them were down that much. And I mean, in October, early November, but the indexes really didn't drop that far. The indexes may have dropped 5%, and these were down, it looks like about 2.5 or something. Well, all right, guys, I appreciate you all for being here. Don't forget to consult a professional advisor for anything you hear on the internet from me or from anyone else. Also, you can always donate to the station. I always certainly appreciate that at paypal.me/Max Convexity. In addition to that, don't forget to like and subscribe, and I'll be back in the morning, and I'll be in Discord if anyone needs me. As soon as I get up, I'll jump into Discord. We'll see what's up. All right. Well, thank you so much, guys. I appreciate it, and I hope you have a wonderful evening. Talk to you later.